Good afternoon, everybody, and welcome to Afternoon Market Action. My name is Glenn.
And my name is Ryan.
Why did it take you so long to respond? You were supposed to go right behind me.
I think there's a lag.
No, it's got no lag. No, there wasn't a lag. That was just you. If you can hear us, I'm glad to be back off of vacation. Thank you, Ryan, last week for filling in. I appreciate it. If you can hear us, by all means, please respond in the affirmative, preferably with VV Nation, to let me know that we're coming across loud and clear. And it's also, as you know, Western Wednesday. Ryan is on fire. Yes, he is. Ryan is on fire. Yeah. All right. So, all right. There'll be no more of that. Wow. I just heard that all the way over here. There'll be no more of that. Rates unchanged. There we go. Let's go. Fed meeting. Where's my mouse? Did he keep it unchanged? Fed. There it is. Let's go put this here. There we go. It's not for me. What's not for me? Oh, there we go. There we go.
Is it just you on the screen now, Glenn?
No, it wasn't just me. Whatever.
It didn't happen last week.
It did, and I wasn't even here.
Right. And it didn't happen.
The Fed holds rates steady, upgrades assessment of economic growth. So I have a question. I will never fish on a waterfall, even if I'm a bear. Where's my cricket? What the flying flip did that mean? All right. Anyway, well, I don't know. Ryan's eyes are covered. Oh, look at that, Ryan. They want to look into those nice, pretty blue eyes. Go ahead. Now you want to blush.
You bat him with the baby.
I want to see your face turn red now because you're blushing. Because it's gonna happen. They want to look into the baby blues. There you go. All right. So you know me. I think that the Fed needed to still be raising rates. This is the third or the fourth time. I think it's the third time in a row that the Fed has held rates steady. All right. We all know that the raising of the interest rates is a laggard indicator. It is, and I totally understand that. And evidently, to the point of pausing rates, they still feel that what they've done is bringing inflation down enough. Enough is relative. Enough to keep the rates the same. So Ryan, before I get into how I feel about it, how do you feel about that?
I'm in the boat that a quarter point was needed.
Okay.
However, I did a short this morning. I don't know if you saw that, Glenn. The jobs data came out softer than expected this morning. And in that short, I even said that this is probably, going to keep rates unchanged. At least this month, but there's always December. We'll see how it goes.
Yep. All right. My 2 cents in regards to that is if you're trying to effectively get inflation down to where you're trying to get inflation down to, you still need to raise interest rates. The economy is slowing, but in my opinion, not enough to the point that you still continue to pause interest rates. So that's just my 2 cents. The Fed don't care. The Fed don't care what I think. I think the Fed just don't care. All right. So with that, let's get into. I want to get into the market first. There's the market. All right. Looking at the graph, a little bit of a wick, a little bit of a spinning doji. All right. Wick at the top of the wick at the top of the candle, wick at the bottom of the candle. Very little movement now on the market. Especially on the VectorVest composite. I do have the death cross that we got a couple of weeks ago. I did that as a video last night. Looks like a lot of you watched that video. To me, it tells me that the market still has more downside. We still have the Fed conference that's going to come up after the announcement at 2:30. I do want to let you know that we have to be done by 2:45 because Ryan and I have a meeting that we have to attend. All right. So we won't be able to look at your stocks today, but we'll listen to about 15 minutes of the Q&A. All right. Wow. You see all that volume crush on the SPX. And, in my video, I talked about the death cross on the VectorVest composite, but not yet on the Dow. Very close to on the Dow, but not on the SPX and not on the Qs. But remember, the VectorVest Composite looks at over 9,000 stocks. So, insight, anything you want to give on the death cross that you want to add, Ryan, at all, or it's up to you?
No, I mean, the death cross, or, if it's the bullish aspect, the golden cross, I mean, that's a tool that's utilized by a lot of technical traders to get a big sense of trend. And I find it interesting that, around the same time you did a video on the death cross of the VectorVest Composite, I see articles of the golden cross when it comes to Bitcoin. Looks like Bitcoin is becoming somewhat of a hedge of the market.
Okay.
Whether it's a hedge or just happens to be good timing with the spot Bitcoin ETF, either way, you can see where the money's going right now.
All right. So I like that idea. Maybe in the coming week or so, we'll talk a little bit more about Bitcoin. But you know what the problem is, Ryan, and we've discussed this. The majority of the people on our YouTube channel don't give a flying flip about Bitcoin. Our channel. And that's fine, but we try to bring you guys what you need. John says, Golden Crossiator, the AI Glenn that tanks the market. Dang. Goodness gracious. All right. So that's what's going on with the market right now. The initial response, we're going to keep our eyes on it at 2:30 when the market, when we get into the Q&A. All right. So what's going on? The Federal Reserve may not hike interest rates next week. This was an older story from October 27th, but consumers are unlikely to feel any relief. So I wanted to just go through some things, and Ryan, comment on this if you want. I wanted to go through some things that we as consumers will or won't like. Credit card rates top 20%. That's huge. That's big. Mortgage rates are at 8%. Auto loans, 7%. Federal student loans, 5.5%. And yes, they're going back into effect that the student loans have to be paid. Deposit rates, some banks are up to 5%. And this is huge. Why is that huge? Because people are leaving the market because they're scared about their portfolios, and they talk to their financial advisors. And you think that this is not at the top of the financial advisors list? Well, Mr. Tompkins, I think right now you need to take your money and put it into an 18-month CD. You get 5%. Whoo, really? Woo-wee! I'm going to get 5%? Good, goodly muggly. Put my money in that. Do you not know, folks? Do you not know? Marcus says we spent $5 trillion for COVID. They need to sell bonds. I don't disagree with you. How oversold the IWM is, there is where the bottom fishing. And something that makes sense, because when it comes time for bottom fishing, it's going to be the lower dollar stocks that everybody's going to be looking at. Right? Big time. That's absolutely right. But think about it this way. How many of you, especially on a channel like this, how many of you can effectively look at 6 months? Look at 18 months on a CD, 5%. How many of you can effectively, and let's say using the VectorVest software, can blow that number out of the water over 18 months? Just type a 1 in the room. If you don't think you can do that with VectorVest, type a 2 in the room. All right? I'm just putting that out there. How many of you know that with VectorVest, you can blow that 5% out of the water over 18 months? Just blow it out of the water. All right. So I'm just curious. And if you type a 2, it's not a bad thing. And that's fine. For anybody who types a 2, it's not a bad thing. Maybe we just need to help you learn how to use the software more. But I'm seeing emphatically, 1s come across the screen. So I understand that financial advisors are putting people into the spot of, hey, we can put you into a situation where you can make 5% over 18 months. And the scared people who are inexperienced in investing their money are going to gobble that up. But it ain't a lot. It ain't a lot. All right. So that was a story in regards to the economy. Another one, are more interest rates hikes needed, what to expect from the Fed meeting. All right, we're going to see about that in a minute. And this is big. UAW deals shows unions are winning. How long will it last? I am a big fan that the big win for the UAW is going to prompt a lot more unions to go through what they just did. And we're going to see a lot more strikes coming up. That's going to hurt the economy as well. All right. All right. So those are the things that I brought up for the economy in and of itself. I've only got, these are some of Ryan's stories. I only got 2 stories today, but there's a reason why I only have 2 stories today. All right. So Ryan, this is your story. Earnings call reveal how companies ranging from Coca-Cola to JP Morgan are capitalizing on AI. Talk about it, buddy.
Correct. Yeah. When a lot of investors think of AI stocks, I mean, they're thinking of companies like, NVIDIA, Microsoft, some of these big tech companies. But there's a lot of companies that are reporting, better than expected revenues, better than expected earnings based off AI systems that they're implementing within their business. Now, this article in particular, delves into a couple companies such as, Walgreens, Coca-Cola, Tractor Supply. A lot of these things, really have to do with improving their supply chains. Now, even restaurants, companies such as Domino's Pizza, they even highlighted on the most recent earnings call its partnership with Microsoft. Now, this partnership is to improve ordering experience for customers and streamline operations.
You have control if you need it, Ryan. You can move around.
Oh, I've got control. Okay. But as you can see here through the article itself, I mean, everything from consumer staples, food and beverage companies down to healthcare. A lot of industries are going to benefit from the AI hype, not just the tech companies. So I just wanted to state that because I've seen that in the earnings call recently, where AI is coming to the forefront. We saw Microsoft, blow out their earnings, having huge AI revenue come in. I think it was up like 30 or 40% year over year from their AI. Now AMD, they released yesterday. They're up after hours or since yesterday on the release of their earnings as well, based on their new AI chips. So I don't think the AI hype is over by any means, and I think there is room to capitalize on this AI frenzy without necessarily diving into tech companies themselves, because a lot of industries across the board are going to improve their bottom line by implementing this AI technology.
Click on the next story because it follows up this story.
Okay, so yeah, this is AMD here. So yeah, this is the follow-up. So AMD, it jumped up after it reported its earnings yesterday afternoon, and mostly because of their strong 2024 AI chip projections. Now AMD is competing directly with NVIDIA when it comes to these AI chips, but last year, they released their GPUs that are geared towards the AI business itself. And they're really just starting to implement these AI chips. So a lot of that revenue coming from projects that they've started this past quarter, even in this current fourth quarter, really won't see, we won't see much of that until 2024 when the numbers start coming in. So I think AMD is a great pick. They're well placed in the AI space. So I just think this is another play. And let's be honest, with a lot of these tech companies being, pretty badly beaten up over the last few months, I think we can, see some really good deals going forward, in the upcoming weeks as opportunities present themselves.
Excellent. 2 people put, I use Glenn 23 and get 75% off at the VectorVest store. No, it is. and 25% off at My Pillow. Kohl's is not sponsoring Glenn, and they wouldn't tell me why. Whatever. John also said, I use Glenn 23 at Domino's for 2 free pizzas for all of November. Wow. You people are funny. You people are funny. Now, here's a statement that Lee put up that I wanted to pay attention to. Pay raises for the UAW may be the death of the U.S. car manufacturer. Interesting
Yeah.
that you said that. I did the video a couple of days ago on the UAW win. But also in that, Lee, I put how much money each one of these companies makes. Stellantis, GM, and Ford. They make more than enough money to pay out the concessions that was in the UAW agreement and not be hurt. So I hear you, but I do understand that these companies do want to keep costs low. And you know what my big fear is, and I talked about this in the Jockey Club this morning. My big fear is that these companies are not going to want to pay, as time goes along, all this money. Everything is going to turn to robotics. So yes, I think the employees won the day, but they may lose the battle. Do you agree with that? Yes or no? Yes, Bill?
Well, Glenn, I'd say they won the battle, but may lose the war.
That's what I meant to say. Thank you, Ryan. I think they won the battle.
And I agree with you completely. We actually talked about this earlier this week, where I think, even after the unions and these companies are able to move forward, it's really going to leave a bad taste with investors, going forward. What if these unions decide to renegotiate contracts? Like you said,
this is a 4.5 year deal, though. So I don't think they can do anything for 4.5 years. That's a good side of it.
Correct.
So this is
Francisco, innovation will take place
later.
So I think innovation, I think that's a really, the rise of the robots, them trying to, integrate more technology. I really think these big auto manufacturers, they're going to start putting a lot more money into how we can automate certain tasks to reduce these problems going forward.
Absolutely. So, and John said profit margins are going to get hurt. So how are they going to go after that? Cars, just like Bill said, cars are going to go up $800 to $900 a car. $800 to $900 a car to overcome some of this. So, all right. So those are your stories, right? I've got two stories. All right, here we go. Arch Capital, earnings per share of $2.31, beats by 74 cents, and revenues beats by $100 million. That's a big win. Next story. Exxon closes at record high as crude oil climbs to the best level in 13 months. Crude is going up for the most part. Oil stocks are going down. That don't seem right. If oil is going up, oil stocks should be going up. All right, that's the way it should be going. All right, that's all stories I got. So before we get into Ryan's, because I'm going to get mine out the way, I got a bone to pick. I got a bone to pick with people on YouTube, on Facebook. I got me
well,
a
Glenn,
bone
I have
to pick.
one more story, just the Apple story.
Huh?
Before you start picking bones.
Huh?
I said I've just got one more story, the Apple story.
Oh, well, I didn't see it. My fault. Hold on. Where's my thing?
Before you start picking bones.
All right, hold on. Did I not put the story up? Arch, AMD, Meta. I'm looking in my chat. I don't see it. AMD. Did you put it in the chat?
It's right below your Exxon.
Huh?
It's right below your Exxon.
I got nothing below my Exxon. Do you see anything below my Exxon?
No, I was talking about in the team
Yeah, I'm
chat.
looking in the team chat. I got nothing below my. All right. So, do you know what the story is? Can you send it to me, or do you just want to talk about it?
All right. Well, we can just talk about it real quick. I know we don't have much time today. Ultimately, this story was on Apple. They had their Scary Fast event, Halloween Eve. I did a short on that. Well, they actually did come out and introduce their new M3 chips and M3 powered MacBook Pros. I think that is a power move going into the holidays. In addition, they lowered the cost for the entry-level MacBook Pro. Did you see that, Glenn?
Yes.
I think getting into that lower cost, especially with consumers feeling the pressure that they are right now with inflation, and I think this is big news for Apple going into the holidays.
I still haven't got my new phone yet, and for DJing, I need to get a new MacBook 2. So I'm not at the MacBook 3. I'd probably need the M2 chip because I don't think my software works with an M3 yet. I got to get a new MacBook and I got to get a new phone. All right. So let's do this. And I had the statement up there about and there it is. GM made $157 billion. And again, in my video, I talked about how much money all three of the companies made. $157 billion in 2022 with 167,000 employees. They could have given everyone a 50,000 raise and still made 148. These companies are making a lot of money. So where's this money coming from? It's coming out of their bonuses and stuff like that. That's all. These companies have more than enough money to pay for what the union fought for. But they're gonna cry the blues, and I guess that's why you call it the blues. Time on my hand. Could be time spent with you. Laughing like children, living like lovers, rolling like thunder under the cover. I guess that's why they call it the blues. All right, so anyway. So how many of y'all caught that reference? I don't know. I don't know how many of y'all caught that reference. Ryan is young and probably still caught that reference. You youngin'.
I did.
You youngin'. All right. So let me get into my picks, and I'll tell you why. Let's go to viewers. Let's go to Glenn's picks. Real quick. 2 stories, Arch, and instead of using Exxon, I went with TDW. I think TDW is a better play. Fundamentally sound, undervalued, earnings growth rate at 36%, and Arch Global, Arch Capital. Okay, all of these stocks. What do all of these stocks have in common? All right. What do each one of these, Elton sing it, there you go. What do each one of these, Ryan, looking at these stocks, what do each one have in common?
They have a high CI rating?
Absolutely. So why do I want to talk about CI? I'll tell you why I want to talk about CI. I got people on Facebook that say, well, we need to know more about what CI is all about. Why? It's a proprietary indicator. Now, let me ask you this question, and I'm going to put it out there for everybody. If everybody wants you to answer me this question. If you had an indicator that showed you stocks that go up more than they go down, would you be interested? Yes or no? That's all I want. If you had an indicator that told you the stocks out of 9,000 stocks that go up more than they go down, would you be interested? Yes or no? All right. And I put that out there because there's a big rigmarole about, well, you need to talk more about what CI is all about and tell us more about. Hell no, we do not. It's a proprietary indicator. And that's what makes us unique is our indicators. So to say that we pay for a software so that we should know more about these indicators. No, you don't. We can give you as much information as we actually can without getting into, because we don't know the proprietary information about it. That's what makes it proprietary. So I asked the question, if you had an indicator that showed you stocks that go up more than they go down because the CI indicator shows you the stocks that are resilient to big price declines, would you be interested in that? And actually, there it does. There you go, Dave. I'm loving that. Who cares?
It works.
It works. And that's what you pay for as a VectorVest subscriber, is the trust in the indicator that we've created for you and that it works. And if you want to be nitpicky and try to pick it apart and say, then go do whatever you want to do. Go create your own software with your own proprietary indicators, and you do what you need to do. But that was a crazy situation on Facebook. And Steve Chappell did an excellent presentation on Friday talking more about it. And that's what sprouted up all of this stuff. So my stocks today are all about high CI stocks. And I want to show you something. Oh, yeah, I'm on a rant. I want to show you something. We know how the market's been going. In the current market's condition, would you be interested in buying into a stock like that? And I'm going to go put on real quick the market timing graph over the same time period. Look at the market and look at this stock. Look at the market. Look at the stock. Next one. We saw the market. Look at the stock. Look at the stock. Not as pretty, but still moving up against the market. Next one. Maybe still not as pretty, but nicely moving up. Bottom left, top right. Bottom left, top right. That is the basis of my picks this week, folks. That is the basis of my picks today. ICI stocks, I've given you 6 of them. That's it. I only had 2 stories, but I needed to quit. I needed to quit this nonsense that goes on. Well, you know.
Hey, Mark, I'm pretty sure that's what he's trying to say.
Say again?
I was just looking at Mark's comment. I'm pretty sure that's what you're trying to say.
What did Mark say? Viewing the chart. There you go. There you go. So you're saying CI works. Mark, yes, I am. All right. That's my picks for this week. I wanted to go into the power of the indicators. You guys pay for the power of the indicators. Instead of spending your energy on trying to break down the indicator or show anomalies or whatever it is you're trying to do, either you trust it or you don't.
Oh, Glenn.
What?
Real quick.
Oh, sorry.
David had a great question in the comment section. He said, what's the difference in CI and RS?
All right, so CI is a technical indicator like relative timing. They both look at price action. Remember, technical analysis looks at price and volume. RT and CI are technical indicators. Relative safety is a fundamental indicator. It looks at the stock's ability to meet or exceed earnings expectations quarter over quarter, year over year. 2 different things. One is a fundamental indicator. One is a technical. And we're one of the only companies out here that have fundamental analysis with the insight of technical analysis when we analyze a stock. CI is a powerful indicator. You're either going to trust it or you're not. You don't want to trust it, don't use it. But when I ask the question is, if you're trying to find stocks, would you be interested in trying to find stocks that go up more than they go down? Emphatically, you guys said yes. That's in a nutshell. Case closed, done deal. All right. Ryan, go look at your stocks. I'm going to put Apple in here. I get tired of people want to talk about what we do and spend all of their time talking about anomalies and not understanding and blah, 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 blah. Either you use the indicators and we try to prove to you that they work. Either you're going to like it or you're not. All right, I'm done. I'm getting off my high horse. I'm sweating too. Gosh dang it. Sweating.
All right. Well, my picks this week, kind of a mixed bag. We've got Meta in the list, AMD, Apple. So I do have a lot of tech here just based on the stories. In addition, I do have Coca-Cola and Domino's Pizza here. Now, the good thing is, look, they're all up today. So that's a positive positive sign. Now, our V relative value, they are a mixed bag here. However, the lowest one coming in at 0.91. It is unfavorable, but not too bad for a list of stocks. Now, as far as RS or relative safety here, all of these do have a safety rating above 1, except one stock in particular, and that's just Coca-Cola. Now, as far as the RT relative timing, they are mixed once again. Only about half these stocks have an RT above 1 here. We do see Meta Platforms and Domino's Pizza are the only stocks that are currently trending down. And even looking at the GRT or growth rate here, again, mixed signals here. We have negative growth rate with AMD. That's the worst in the list. And the highest in the list is coming in with Coca-Cola at just 17% growth rate. Now, all of these stocks do have a hold rating. I'm not saying go out there and buy these positions by any means, but with the news, around these stocks, I do see, some upside potential, or at least some good bottom fishing opportunities may present themselves for these positions going into the near future.
All right.
But yeah, that's my list. Glenn, it's 2:29. Do we need to migrate over to the?
Yep.
See what our old buddy Jerome Powell's up to?
Let's go see what JJ's got to say. Oh, JJ. Nat.
Let's go see
the
what old JJ's up to.
MA versus the MPI.
See what kind of rhetoric he's talking about.
I like them both, Nat. I like them both.
Oh, and Sonia, yeah, there is a low CI on Coca-Cola, and that's just expresses Glenn's point that Coca-Cola typically moves lower more than it moves up.
Why USO went down? A lot of the oil stocks are still moving down.
Yeah.
But oil's going up.
Oil is up today. I see it was back above $86 last time I looked this morning.
What did you do, Joey? This is for the Fed.
Jerome is making a big mistake, Marie says.
Right there. I didn't do that. You did that. I didn't do nothing. Whatever. Sometimes I like you. Sometimes I don't. You don't care. I know you don't care. Oh. Okay.
Oh, wow. Yeah, oil did turn negative for the day. It was positive when I looked earlier, Akshaya, but I see, yeah,
leave some space for the
Brent is just below $85, and then WTI is just above $80.50 a barrel.
Oil at 80. All right. Joey's setting up for him to talk.
Powell is talking now.
Well, then why are we on delay?
Oh, yeah, move your little red bar up.
Oh, move it all the way over. Okay.
Maximum employment and stable prices for the American people.
Can everyone hear him?
Okay.
Price stability, we will not achieve.
Can you guys hear it?
A period of strong labor market conditions that benefit all.
I can barely hear it.
Since early last year, the FOMC has significantly tightened the stance of monetary policy. We have raised our policy interest rate by 5.25 percentage points and have continued to reduce our securities holdings at a brisk pace. The stance of policy is restrictive, meaning that tight policy is putting downward pressure on economic activity and inflation.
Yeah, I'm not surprised the market's up right now.
The full effects of our tightening have yet to be felt. Today, we decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings.
Wow.
The committee is proceeding carefully. We will make decisions about the extent of additional policy firming and how long policy will remain restrictive based on the totality of the incoming data, the evolving outlook, and the balance of risks. I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has been expanding at a strong pace and well above earlier expectations. In the third quarter, real GDP is estimated to have risen an outsized annual rate of 4.9%, boosted by a surge in consumer spending. After picking up somewhat over the summer, activity in the housing sector has flattened out and remains well below levels of a year ago, largely reflecting higher mortgage rates.
So that's a pullback in the economy.
Higher interest rates also appear to be weighing on business fixed investment. The labor market remains tight, but supply and demand conditions continue to come into better balance. Over the past 3 months, payroll job gains averaged 266,000 jobs per month, a strong pace that is nevertheless below that seen earlier in the year.
And keep saying that.
The unemployment rate remains low at 3.8%. Strong job creation has been accompanied by an increase in the supply of workers. The labor force participation rate has moved up since late last year, particularly for individuals aged 25 to 54 years, and immigration has rebounded to pre-pandemic levels. Nominal wage growth has shown some signs of easing, and
oh yeah, Drew, I do see that. Jerome doesn't have his glasses on.
Oh boy.
Although the jobs to workers gap has narrowed, labor demand still exceeds the supply of available workers. Inflation remains well above our longer run goal of 2%. Total PCE prices rose 3.4% over the 12 months ending in September. Excluding the volatile food and energy categories, core PCE prices rose 3.7%. Inflation has moderated since the middle of last year, and readings over the summer were quite favorable. But a few months of good data are only the beginning of what it will take to build confidence that inflation is moving down sustainably toward our goal. The process of getting inflation sustainably down to 2% has a long way to go. Despite elevated inflation, longer-term inflation
long way to
expectations
go.
remain well anchored, as reflected in a broad range of
Just
surveys
means
of
he should have been
households,
raising interest
businesses,
rate.
and forecasters. as
Higher
well
for
as
longer.
measures
That's the
from financial
phrase
markets.
they like these days.
The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation
Mark says he's
imposes
gonna
significant
drop the
hardship
hammer.
as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. We are highly attentive to the risks that high inflation poses to both sides of our mandate, and we are strongly committed to returning inflation to our 2% objective. As I noted earlier, since early last year, we have raised our policy rate by 5.25 percentage points, and we have decreased our securities holdings by more than $1 trillion.
Wow.
Our restrictive stance of monetary policy is putting downward pressure on economic activity and inflation. The committee decided at today's meeting to maintain the target range for the federal funds rate at 5.25% to 5.5%, and to continue the process of significantly reducing our securities holdings. We are committed to achieving a stance of monetary policy that is sufficiently restrictive to bring inflation sustainably down to 2% over time, and to keeping policy restrictive until we are confident that inflation is on a path to that objective. We are attentive to recent data showing the resilience of economic growth and demand for labor. Evidence of growth persistently above potential, or that tightness in the labor market is no longer easing, could put further progress on inflation at risk and could warrant further tightening of monetary policy. Financial conditions have tightened significantly in recent months, driven by higher, longer-term bond yields, among other factors.
Watching the market.
Because persistent changes in financial conditions can have implications for the path of monetary policy,
It's
we
still going
monitor
to the
financial
upside.
developments closely. In light of the uncertainties and risks and how far we have come, the committee is proceeding carefully. We will continue to make our decisions
Interesting
meeting by
question,
meeting
Dennis.
based on the totality of the incoming data and their implications for the outlook and for economic activity and inflation, as well as the balance of risks. In determining the extent of additional policy firming that may be appropriate to return inflation to 2% over time, the committee will take into account the cumulative tightening of monetary policy, the lags with which monetary policy affects economic activity and inflation, and economic and financial developments. We remain committed to bringing inflation back down to our 2% goal and to keeping longer-term inflation expectations well anchored. Reducing inflation is likely to require a period of below potential growth and some softening of labor market conditions. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
All right. We only got about
Howard
5
Schneider
more
with
minutes or
Reuters.
so.
Thank you, Chair Powell, for doing this.
Nothing too exciting
To what
from that.
reference
Oh,
to
now the
rise in
market's
long-term
starting to
bond
drop.
yields, to what degree did that supplant action by the Fed at this meeting?
Do you see that big drop in this candlestick?
Thanks for your question. So I'll talk about bond yields, but I want to take a second and just sort of set the broader context in which we're looking at that. So if you look at the situation, let's look at the economy first. Inflation has been coming down, but it's still running well above our 2% target.
There you go.
The labor market has been rebalancing, but it's still very tight by many measures. GDP growth has been strong, although many forecasters are forecasting, and they have been forecasting, that it will slow. As for the committee, we are committed to achieving
Lee says
a stance
Santa
of
Claus
monetary
rally
policy
coming.
that
I
is
think it's
sufficiently
gonna be a
restrictive
short
to bring
one.
inflation down to 2% over time. And we're not
No, I
confident
didn't,
yet
Amir.
that we have achieved such a stance. So that is the broader context into which this the strong economy, and all the things I said. That's the context in which we're looking at this question of rates. So obviously we're monitoring, we're attentive to the increase in longer-term yields, and which have contributed to a tightening of broader financial conditions since the summer. As I mentioned, persistent changes in broader financial conditions can have implications for the path of monetary policy. In this case, the tighter financial conditions we're seeing from higher long-term rates, but also from other sources like the stronger dollar and
Big
and
crash
lower
or
equity
big
prices
rebound?
could
Drew
matter
says
for future rate decisions
composite dropped
as
when he
long
put
as
his glasses
two
on.
conditions are satisfied. The first is that the tighter conditions would need to be persistent. And
Yeah,
that is
Marie, I see the
something
market
that
is
remains
trying
be
to
seen.
digest it.
But that's critical. If things are fluctuating back and forth, that's not
What do you
we're
think,
looking
Glenn?
for.
You
With
think
financial conditions, we're looking
Apple's
for
earnings will have
persistent
more of an
changes that are material.
impact than this
Second thing
announcement
is
today?
that
I absolutely do,
the
yes.
longer term rates that have moved up, they can't
Because
simply
right now, I
be a
mean, the
reflection
market
of
jumped up. I
expected
mean, it's
policy
pulling back
moves
now.
from
It's pretty
us,
much where it was
that
right
we
at
would
2
then,
o'clock.
if we
There it
didn't
is.
follow
It is
through
on a
on them,
3-month graph.
then
That's
the
where we
rates
are.
would come back down. So and I would say on that, it does not appear that an expectation of higher near-term policy rates is causing an increase
SMCI earnings
in
today. I
longer-term
didn't know
rates.
that.
So in the meantime,
I
though,
think Apple will have a bigger effect.
perhaps
on
the most
SMCI
important
too.
thing is that these higher treasury yields are
definitely.
showing through to higher borrowing costs for households and businesses, and those higher costs are going to weigh on economic activity
look at that.
to the extent this tightening persists. And the mind's eye goes to the 8%,
the
near
market's
8%
continuing to go down.
mortgage rate, which could have pretty significant effect on housing. So that's how I would answer your question.
Just as a quick follow-on to be clear on this, in your opening statement and just now, you seem to imply that you are not yet confident that financial conditions are restrictive enough to finish the fight. Is that true?
Good question.
Yes, that's exactly right. To say it a different way, we haven't made any decisions about future meetings. We have not made a determination, and we're not. I will say that we're not confident at this time that we've reached.
Jazz
such a stance.
says,
We're not
going
confident that
down
we
except
haven't.
for my
We're not confident
Levi's.
that we have, and that is the way we're going to be going into these future meetings, is to be just determining the extent of any additional further policy tightening that may be appropriate to return inflation to 2% over time.
Yeah, it's continuing to want to drop.
Look at the 3-month graph. Red bar is getting bigger.
Hi, Chair Powell. Thank you so much for taking our questions. I wonder, if you don't raise interest rates in December, would the presumption be that at that point that we should expect that rates are at their peak, or is there a possibility of restarting rate increases next year? And are there any costs to taking a more extended pause?
So let me start by saying we haven't made a decision about September. You're asking a hypothetical there, but we're going into this December meeting. We'll get, as you know, 2 more inflation readings, 2 more labor market readings, some data on economic
Marcus
activity.
goes, Powell giveth
and
and
so
Powell
we'll be taking
taketh
also the
away.
broader situation, the broader financial condition situation.
like that one.
And the broader world situation. We'll be looking at all those things as we make a decision.
Well, Glenn,
in
should we
December.
go on the
haven't
last
made that
screen? Because
decision.
it's getting close to
I would
2:45,
say
Yeah, we gotta
buddy.
go.
that the
Unfortunately,
idea that
I
if
wish we
you-
could hang out
the
longer
idea
and
that
do you
you
guys
would-
stocks.
It's difficult
Yeah, we
to,
gotta
to
go.
raise
All right.
again after
I'm gonna
stopping
close
for a
him
meeting or
off.
two. It's just not right.
Sorry about that
But it's-
today, folks.
I don't think we were throwing a curveball by
No,
any means today.
I don't think so. And, based upon the video from last night about the market crash, what am I looking for? There's the end of day. I'm looking for the big thing for me is I'm looking for the DEW to confirm. All right, we can take the primary wave. For each primary wave we've gotten in this current market's conditions has been a tough one to play. A lot back and forth. I think at this time, for a real move to the upside, I'm looking for the DEW timing signal. All right.
Mm-hmm.
Mark, stop doing that. Don't call product support because our product support staff will be shut down for an hour for this meeting. All right. So don't even start. And
Yeah, anyone that's going to call in, they're going to be closed from 3 to 4.
Please tell us what's happening. Who cares what this guy is saying? Amir, you got to care what this guy is saying because that's what's happening. That's
the guy that moves the market.
That's what's happening right there. Is that guy? It's that guy, Amir. The DEW is in the red for 3 months. Maybe is just angry and does it want to go green? We'll see. You shouldn't hate him. Hate is such a strong word. That's what I was doing, just for you to remind us, folks. I did tell you that. Why don't you listen? Why don't you listen?
So no bottom fishing until DEW up.
Ryan, I'll let you answer that question. What do you think?
I would say waiting for the DEW to go up is a more conservative approach to bottom
Excellent
fishing.
answer.
You're trying to get more confirmation.
Excellent.
When you bottom fish, if you just see a primary wave up like we got flash today and jump in, just know that's the most aggressive approach. Now, if you wait for that primary wave up and then a green light, that's still aggressive. Now, if you wait for that primary wave, a green light, and some follow through the next day, then you're starting to become more prudent. And as you wait for more timing signals, you're becoming more conservative. Yes, you're giving up upside potential, but yet you are mitigating or trying to reduce downside risk. So bottom fishing can be anyone from very aggressive or speculative in nature to a very conservative approach. And that's based on the timing aspect and the type of stocks you get into. That's my 2 cents on bottom fishing.
Absolutely, I'm with you on that. The question is, so do we wait for the DEW? In my opinion, in this current market's condition, I'm with Ryan. I like making sure that you're getting confirmation based on how you invest. But I'm of the mindset right now, yes, I would rather to wait for the DEW. Will I leave some money on the table? Yes, but I'm okay with that, given the market. All right, we got to go. Can we talk about we talked about all of those stocks, except for Musa. We didn't talk about Musa. All right, we got to go. All right,
we do got to go. Glenn, sign us off.
Okay. Adios. Arrivederci. Ciao. Au revoir. Sayonara. Aloha to all my peeps in Hawaii. Bom dia. Salam, shalom, namaste, yasu. Until the next time, folks. See ya.
See ya.